Hello everybody, Mr. Clark here. Today we're talking a little bit about the stock market ticker. So, when you see that little scrolling marquee shifting across the bottom of the news station and talks about a bunch of different stocks, bunch of letters, numbers, arrows, colors, right? That's what we're going to talk about today. So let's get started. So originally, the stock market ticker, actually the term ticker comes from what it was originally created. So Thomas Edison had created the universal stock ticker, and it printed about 1 character per second. That was about its speed. Uh, it's got the name ticker because of the ticking sound as the tape came out, every single tick, 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 right? That was the sound that it made, and so that created a quicker method of getting information about stocks versus doing a handwritten and hand-delivered message, which of course speeds up the time at which we can react to the stock market. A lot of these tickers were actually connected to telegraph machines. So here's a good image here of a nice little vintage, Edison's stock market ticker. There's a little tape roll there, and that was the information used to help kind of get things out. Now today we see them on about everywhere. You can get an app with your phone. You can see it on TV. You can go to a website. It's all over. If you go to any like major metropolitan cities, they'll have them sitting on billboards, blasting across the skyline. So information obviously moves much faster now than it used to. But I wanted to go over a little bit of what this data is, because I think for the longest time I didn't really understand what any of it meant until I started looking at it a little bit more. We're going to go into a more specific version of what we see on a stock market ticker. Nowadays, you usually just see a color, the name, and then how much up or down it went. They add a color in there to help us get a little bit of a better clarity, a quick, quick synopsis of whether the stock is doing better or worse. Again, as a reminder, it's basically an indication of how the company is doing. It's the perception of the public, as well as based on the decisions that the company is making. So I just want to go over an example. We're just going to pick one of these here. Let's see. We'll go with Apple. I mean, people know what Apple is, right? Apple's not anything unheard of. Let's make sure we're on the right layer. There we go. So we have APL. Already spelling it wrong. AAPL. So that's their ticker symbol, and we see that showing up. We know, hey, this is going to be Apple. Another thing that we might see show up on there is, let's say, 12K. Now, what that 12K means, 12K or 12,000, again, just as a reminder, 12K is like 12 times 1,000, or 12,000. That's the number of shares that have been purchased or sold. That's the transaction that's incurred. It's the sales or share volume that's happened. You might then see either an @ symbol or space or something in here, another number here, and it might say something like, I don't know, 150.5. And I'm not sure what Apple's currently trading at right now, but let's say it's 150.5. That's how much per each individual share. So you could then figure out, well, 12,000, and we're going to multiply that by 150.5. And so real quickly, you can see that we're making, let's see, what is that? It's 1.8 million, roughly, approximately $1.8 million. That was the transaction that occurred. Somebody purchased that particular transaction. Now, again, you might not see that 12K show up. It might just show the logo, the last traded price, which could be that 150, and then that's it. Now, the next question is, when we're looking at whether this was good or whether this was bad, that arrow tells us that the trade value, the purchase, was higher than the previous day's close. By how much, we don't know. We could say it's up, it could be up $10 and 37 cents. I don't know, just pick something, right? And so you'd see Apple at 12,000 shares, a recent purchase. It was purchased at $150.05 a share, and that purchase of that price, that 150.5 a share, is up $10.37. So we could say we're sitting at 145 and what, 13 cents. That's what that would be the previous day's close. We've gone up by 10.37, so we're sitting at 150, excuse me, and 50 cents. And that is our trade volume. So you might see some color in it. The ticker could be rolling across the screen. So if we're saying it's up, you might see something like this. Sorry. You might see something like this. So we see AAPL, 12K. Actually, the color on this part would really matter, but you'd see something like this part would be in green, that 150.5, and then there'd be an arrow and say how much are we trading at, 10.37. And so we'd know that we were trading at a higher value than the previous day's close. That's what that's saying. Again, you might not see the number of shares, but let's say they do show in real time that trade volume that just occurred. This is our setup. Otherwise, you might also see it as just something like this, AAPL at, and then you might see in green or red, depending on what it is, an arrow. The value 150.5 and then an arrow of 10.37. Or on the contrary, you might see something like this. It traded at 150.5, and that could be down from the previous day by about $5 or something like that. So maybe the previous day's closing we were trading at 155.5, and now today a purchase of 12,000 was made at $5 cheaper. So somebody saw that go down and took an advantage of buying that stock in that process. So I mean, that's really what's important, what investors are looking at. And again, a lot of the stuff when it comes to the majority of the shares that are being purchased, they're happening in like split-second timing. I mean, it's not an individual who is going and running this and saying, I want to make this purchase. When the algorithms, if you will, the software that's used determines a change by a certain amount, they will set in or build into that algorithm commands to buy or sell and how much to sell to balance out whatever their risk preference is. And whatever capital they're willing to put on the line in that risk. So if they've got a higher risk and they've got capital to spend and Apple drops by $5 and their algorithm in their system predicts, well, hey, you know what? We know it's probably going to go up an extra $15 and that by the end of the week, because that's where it's hovering, because we've been calculating out the last 2 years worth of simple moving averages, and we've got a huge pile of data that says that's where it's going. And maybe they've built in some things based on information they know, like, hey, the company is coming out with a new phone, it's going to be a major change, they've got lots of whatever hype. There's a lot of factors that go at play here, but for an average trader like you and me making a purchase, this is the information and how it's useful. Most of the lesson that we talk about total value of a trade. Again, total value of a trade is pretty straightforward. When you go in looking at total value of a trade, all we're really doing is saying, well, if we sold, I want black, here we go, 10 shares, right? And we sold it at $30 a share, then we spent, right, just $300, and that's basic math. If you see 15,000 shares at, you could say, I don't know, $1.37, right? We can calculate these things out. We can say, well, we have 15,000 shares, which it's a lot of shares, but they're $1.37, so not too big of a deal. We're looking at approximately 20,500. I think it's 20,550, but that's the total price of that particular transaction. Almost. The difference is there are trading fees. If you have a broker doing this for you, there might be broker fees, right? Because they're going to get fees through processing. wherever they do this through. It could be through Vanguard, it could be through Fidelity, it could be through any number of brokerage outlets. There's a broker that's doing this as well. There might be a broker fee here, right? And there could be any other types of little fees that are in here. We might have limitations. They may say you can only make, for some stocks, you can only make a purchase if it's X amount of shares, or pay a fee or a penalty because you bought too little or something. I mean, there could be a lot of variety here. The vanilla of it is though 15,000 at $1.37, 20,005. I want to say it's 550, but and that's the total share. Now, what you could look at if you're looking at this data right here is say, well, it's up. It's if it was 137 a share, and that's down from, let's say it's down by $5, then I guess you could say, well, if we'd bought it yesterday before the day's close, or at the day's close, right there at the day's close, we were the last person to purchase, then we could have looked at 15,000 times $6 and 37 cents, right? And we could then calculate out that value and say what we saved. But in the bulk of what we're doing, it really is just number of shares times the price per share. And so when we do any of these assignments on here, we can look at trade volume. Again, if you see something like 2K, that's equal to 2,000. 2M would be 2 million. Oftentimes they're in decimal form. So going back to your basic, grade school grade school math, where you say 5.3 times 10 to the 5th power, that's like 5.3, and we move the decimal over 5 places, right? And so 5.3 times 10 to the 5th, that's really the concept of what we're doing here when you see a decimal. We see 2M, we know it's million, we know it's 2 is the leading term in that million, and then we're going to put that many zeros. If it's 2.563 M, then we know we're looking at 2,563,000, just like that. Really, that's the most of what we're looking at here. We talk about positive money flow or negative money flow or things like that. Again, if the company is selling at a higher value, then that value that company has, at least for the perception of the public eye and through the business world as well, the business community, improved. Again, we need to understand when you're buying stock, you are buying a part of a company. You are valuing that company to be increasing by some amount or decreasing, hoping that you're going to buy on the low and sell on the high, which is our ultimate goal. We want to see things rise and get there before it gets to the top, and sell before it tanks to the bottom. That's our whole goal here. But again, just as a reminder, well, if we actually go back to just these original images here, we can take a little bit of a clean slate here. We can take any one of these, and I'm going to stick with, we could say Google, just because I want to say Goog. And then I can say that's, I don't know, we bought 1,000 shares, or the most recent transaction, whether we bought it or not, 1,000 shares, we bought them at $1,100. I don't know what they're at either, but just pick a number. It'll change by tomorrow anyways. And then this could be up by some value. Again, that might be in a different color. On a ticker on a screen, you might see it as, there we go, green like this, and it might be up $20 and some change, something like that. Or it could be down, from $20.52. That just means that if they sold at $1,100 today, that yesterday's close was $20.52 less than that. Today, we say it closed at $1,100 today, then yesterday it was $11,120.52. That's really all we're saying here with this lesson. We're just simply saying we've got the company, the trade value, the trade price, and whether that was a increase from yesterday's close or a decrease. If you have questions, please ask me. It's a fairly straightforward lesson. Looking forward to working with you on it if you have questions. But until next time, thank you very much.